Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, November 25th, 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. You can see on the trend gauge in the upper right of the screen, we've got the coveted four green arrows. Means market leaders are acting well, and the major indexes are trending above the three time frames that we track. That's the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average. So what happened today? Well, it's a third straight day of outperformance by small and mid caps and underperformance by the Magnificent Seven type names. Over the weekend, Trump picked Scott Bessent as his Treasury Secretary, and the market liked it. He recently did an interview on CNBC and laid out this 3-3-3 plan that had to do with reducing the deficit, increasing oil exports, and what we saw was a gap down in yields and the dollar, and a gap up in the market. Now it's the gap up stuck better in mid and small caps. Magnificent Seven type names continued to underperform. We'll talk about that as we get into it. But third straight day of that. We'll see how the rest of the week plays out. This is typically a bullish week for the market. So here are the numbers. The 21 over 21. We got 12 up and 8 down, but the down a little bit, taking a little bit more bite than the moves higher, as some of the 21-21 just got extremely extended, and they don't go to the sky forever. So really not a surprise. But down an average of 0.6%. The big eight down 0.62%. Nvidia, Tesla, and Netflix particularly hard hit here. There was a weird algo rotation that hit late in the day that pumped Apple higher and sold off Nvidia and Tesla. You never know what the computers are going to do. The RG8, we like to see this. This is our 8 growth ETF composite, up an average of 1.34%. S&P 500 gapped up 0.6. So the 0.3 close a little disappointing, but just a little too far, too fast, and running into that 6,000 resistance area again. Not quite ready to get above it, and the weight of the big cap techs pulling back on them. That's certainly not going to help the S&P, but you do see the equal weight S&P up 0.9. So we're not seeing money leaving the market. We're just seeing rotation, and other sectors are certainly benefiting from that. NASDAQ 100 up 0.16 after gapping up 0.7. Sold off within the first 15 minutes. And again, just rotation. You can see the equal weight NASDAQ 100 up over 1%. Dow up 1%, mid and small caps up over 2% at one point, pulled back a bit as they got a little too extended as well. Both up about 1.5%. Global 60/40 up 0.68. Most of this was global bonds. As I said, yields pulling down. That means bond prices higher. Our flagship GROTECTION portfolio underperformed, down 0.17%. We'd love to outperform every day, but we had a big period of outperformance Monday through Thursday of last week, and it's some reversion to the mean going on there. We've done some offensive selling, but to lock in some gains. But as I said, pulling back to the mean in a bunch of the names, and Nvidia also underperforming since its earnings report. Let's get into the charts. Start off with the S&P 500. You can see poking the head above the 6,000 level. Let's go to a 5-minute chart and see the gap up, and we ran to an all-time high, 60.21, and then 9:45 we reversed and did a 3-hour trend lower back into Friday's tight range. A little bit of a bounce early afternoon and then tight into the close. All in all, nothing wrong. That's just a resistance area we can't get through right now, but we are riding the 8-day exponential moving average higher. And if you look at the equal weight S&P 500, this is the beauty here. This is what we'd prefer to see out of the market cap weighted S&P, with the gap up and the gap stuck, and the relative strength as well. And again, this is just it's just what we're seeing in the market showing. We'll go to the NASDAQ 100. Relative underperformance by the NASDAQ 100 big cap tech names started 2 weeks ago. In fact, started the day of the gap up after the election. And you can see the NASDAQ 100 has not made a new high here, while the other major indexes have. So just a period of underperformance here, in particular, 3 days of underperformance over the past three sessions. Let's go to the Dow Jones Industrial Average, all-time high. Nothing wrong with that in any way, shape, or form. But do notice where the relative strength line was back in January and where it is now. This is why no chart is complete without a relative strength line, because while the price action has been great to all-time highs on a relative basis, you're lagging the S&P 500. Onward to mid caps. Looks a lot like the equal weight S&P. These do tend to look quite a bit alike frequently. There was the move up on the election, pulled back to the pivot, 4, 5, 6 days up now. The past three very powerfully into the 3,400 level. And note the relative strength confirming that also. But again, same thing with relative strength. It's still below where it was when price was all the way down at 2,800 in January when the year kicked off. So again, no chart complete without a relative strength line to give you some perspective on where things actually are. Same thing on the relative strength line with small caps here, as you can see, but gapping up right into all-time highs before pulling back a little bit. We got a bit extended here after this big 3 day up move, vertical move. We hit the +3 ATR. We took some of our small cap proxy off URTY when we hit that +3 ATR. Just booking some gains when things are extended. They naturally seem to pull back after that. So there's the major indexes. Let's go to the VIX. We want to see it below 16, and we've got a 14 handle now, so certainly can't complain about that. Let's go to the US dollar. This is some good news here. So while the dollar broke above resistance last week, this is an evening star pattern on the dollar as we reversed after a period of movement higher. If you actually look at the UUP ETF, this is an abandoned baby pattern. Love that name. One of my favorite pattern names, abandoned baby. And basically, it's what it is: a gap up and then a gap down, leaving gaps on both sides of it. Very similar to the evening star pattern that the dollar is showing. But if we can get some weakness in the dollar, that's good for the stock market overall. So from the dollar, we'll go to precious metals. Normally, the weak dollar is good for them as well, but not today. Gapping down 3% on gold stocks, but this is after five straight up days for gold. GDX down 3% after a period of outperformance last week, and silver gapping down as well, down 3% on the day. Bitcoin, everybody talking about Bitcoin 100K. I saw some quotes that it got over 100K, but I don't know if that's actually there. There are different exchanges that give different quotes on there, but uh, regardless, we're stalling after a strong up move right at that 100K area, down 4.4% today. Now let's go to bonds, the broad bond index. You can see breaking this downtrend line in yields. Bond prices up means bond yields down. We'll see that in a second. Here's TLT, same thing, breaking the downtrend line. The 30-year long bond yield, you see the gap down there. So breaking down from this 2 week consolidation, going to the next consolidation level down. The breakout was this 444 level. That's 4.4 equivalent on interest rates. And if we get below there, we'll be breaking the 200-day moving average as well. That would be a good thing for growth stocks and also some a confidence thing in the long-term treasuries. TNX, the 10-year, same thing, breaking down from this 2 week consolidation pattern into the next level below. 442 was the resistance area there. So look for either a bounce there or a break through that level. All right, that's our inter-asset correlation charts. Let's go to the tail of the tape. Stochastics for the most point positive. As Connor mentioned, the NASI, this is a tailwind for stocks. It hooked up on Friday. On the other hand, percent above the 5-day is also extended. So those two things are battling it out. The dollar, we still got the red arrow up there because it had been trending lower, but hitting overbought and reversing. We'll be keeping an eye on this the rest of the week. I mentioned the Trump nomination and the market's liking it. Day count from up two to up three, 3 days above the 8 day, 6 days above the 21 day. As far as sectors go, 9 out of 11 of the spider sectors up. Nice moves up in transports, retail, ITB with interest rates low. That's home builders and banks to the downside. Oils, gold and silver stocks, XLK and the MAGs. That's Magnificent Seven. FNGS is another ETF that tracks those. From a portfolio standpoint, we did two offensive sells. A lab extended between 3 and 4 ATR from the 21. URTY also an offensive trim there. Hit the +3 ATR, which is very extended for an index, and stopped on ERX. Big reversal in oil today, took it below the 8 EMA and about a one less than a 1% loss on that. So we blew that out. That reduced our beta from 1.93 to 1.83. Bottom line on the day, day three of small mid cap outperformance and the MAG-7 lagging. This is typically a bullish week, Thanksgiving week, and headed into bullish seasonality. So obviously we'll be keeping an eye on that. Should be some slow trade on Wednesday and a half day Friday in the market. Tuesday's ranges, let's change these up a little bit and bump it up higher. S&P 5950 to the 6020 level, NASDAQ 100 500, excuse me, 500 to 515. And will mid and small caps continue to display their RS, and let's keep an eye on the US dollar as well. I'll add that in while we're talking about it. Is the dollar going to sustain that failed breakout with the announcement of the Treasury Secretary? So those are some things we'll keep an eye on the rest of the week. Let's get to charts now. The 21 over 21. Two new ones on here. Oddly, one that fell off is our largest position, NVIDIA, which after gapping up on earnings has just come under some distribution. You can see above average selling on this today, breaking the 21. That's also a failed breakout of this flat base pattern, coming into the 10-week moving average where we would expect it to find support. The other one that we punted was ERX. With the big negative reversal back below the 8 day moving average. So a scratch trade on that. First one up here is a new addition. This is Toll. I talked about ITV breaking out. This is the leader in the group. You can see it breaking out of this nice short 25-day, 5-week flat base, relative strength confirming it, up 6.5% on the day. So Toll representing builders in the 21 over 21. We do try to keep at least 10 separate sectors in here. We don't want to all be piled into one particular group of stocks. So we'll go through the rest of the list now for the week. If it's flagged, we own it. A-Lab, we did some offensive selling on this today with it getting extended. Snowflake, looking to add to this using some of our short-term indicators like the 60-minute stochastic and the 8 day moving average should it catch up to it. Deckers with a second day up after the cup and handle breakout last week. XPO undercutting but reclaiming the 8 day moving average. Dutch Brothers hanging nicely above this 50 level and riding the 8 day moving average higher. Nice tight action over the past 3 days. We own that. Twilio continues to act strong, but a reversal today. Toast also acting great. Sprouts bouncing off the 8 day moving average into the 150 level. Carvana gapping up and reversing along with a bunch of leaders today. Palantir, same thing. Team, same situation. Dell reports tomorrow. We've got a 2% size in this. We'll be holding through earnings. LNG, keeping an eye on an entry for this. Stopped on the broader ERX, but Nat Gas seems to be acting better, and this is right on the 8 day moving average. So we're looking for a possible entry on this one. Reddit pulling back to the 8 day moving average after the big move up. We did some offensive trimming on this last week. Tesla, not a nice candle, gapped up above that 360 level today and just sold off the rest of the day. And then I mentioned the late algo selling on this needs to hold the 8 day moving average. Celestica breaking the 8, but all these, of course, still above the 21. MicroStrategy, is this a blow off top candle? We'll see. Looked a lot like SMCI, but SMCI did make a higher high 2 to 3 weeks after the recorded blow off before completely falling apart. There's Bitcoin. MSTR and Bitcoin are going to move in sync. Vertiv with a harsh pullback today, breaking the 8. And finally, SMR, a peer in the nuclear energy group, did an offering. And after that hit the tape, most of these nuke related names sold off today. SMR being the worst of the 21 over 21, down 7% on the day. So that's the group that will take through the rest of the week. Our 2121 leaders list helps us keep a pulse on, well, if leaders are continuing to act well, and they sure have been during this most recent move higher. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you'd like to become a client, reach out to my partner, Dan Stewart. That's dan@revereasset.com. And a reminder, our flagship portfolio is named GROTECTION. It's designed with a dual mandate, that is, grow assets during uptrends. Things start to pull back, our stops will take us out of the market, not our opinion, our stops. And if you get fully bearish like we did, breaking the 200-day moving average in 2022, we just get the heck out of the way. All bear markets, if they're going to occur, it's going to happen below this black line. That's the 40-week or 200-day moving average. As long as you're above there, the market never gets into serious trouble. And with that, I'll wrap it for Monday, November 25th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.